Alright, so I assume that y'all can see my screen. So the way I teach, I go first with the template and then we go into the chat. So what is order flow? Now the last class we have done market structure, basic and advanced together, and we're going into order flow right now. So order flow is simply price movement. Maybe there is another definition of the order flow. You guys might be thinking the order flow of volume and the rest, volume chart, volume profile and the rest. That's not what I'm talking about. The order flow I'm talking about right now is movement of price in a particular trend without an interruption. That is the order flow I'm talking about right now. I'm not talking about volume profile, order flow, or whatever. I'm talking about the order flow that deals with price movement in a particular direction without an interference. Okay, now we have an uptrend, as everybody knows. Okay, higher highs and higher lows. Now let's assume that these are internals. I told you guys the meaning of internals in the last class. I said internals are simply the little minor break or structures you see inside your external. Okay, the little minor break or structure, the lower time frame. And now it's just like the last swing point where price broke structure out there. The breakout structures that are found inside of it are simply the internals. Okay, now this movement in this internal that is moving without an interruption, I mean is taking out the lows, is called a bullish internal order flow. Now for an order flow to be interrupted in the lower time frame, it involves price taking out two break of structure internally. And I said before in the last class that price can take out this guy and still buy. It can also take out this same guy and still buy. It's are they taking out, which you'll be finding out as time goes on. It can take out the first internal and still buy, take out the second internal and still buy. But a disruption of an internal order flow is when price takes out the second internal break of structure. Now this first one, the most recent break of structure internally, is called inducement. That is the trap for early traders, while the second one is called disruption. If we check the English meaning of disruption, we find out that disruption is something like an interference, something stopping something that would have happened. That is disrupting. Say he is disrupting my view, he's blocking my view, he's not allowing me to see, he's covering my view, there's an interruption in my view. The girl disrupted my view, or I was walking and I was disrupted. So simply like something hindering what was going on before. So now we have this second low as a disruption, which means that there is no more internal bullish order flow. The first guy is called an inducement, and price can take out inducement and still go in that direction. First guy, inducement, second guy, disruption. Takes out the first guy, can still buy, takes out disruption, and may likely not buy again, except that the remaining part of the except to be completed when we get to entry. But just know that there is an except here. But take it from me right now that a disruption low should not get taken out because it is an interruption of the ongoing internal order flow. Now that's all about the external. Now for the external, let's assume all of these are 4 hours time frame and they already have their internals there. Externals. Okay, and it's buying. Now for the externals, these are external bullish order flow. It is stated that price should not take out the most recent external low. Now, a break of structure is simply price taking out a particular swing point with the body of the candle. Now, if price comes to this 4 hour time frame and it takes out this low and it closes with the wick, there's what we call pullback candle entry. Okay, so which means that what it has to close with the body of the candle below this place, and then there is a way it can close at this point that we can still enter even if it closes with the body of the candle. There's what we call last point of true mitigation. LPOTM. Last point of true mitigation. It is where we consider as the last point where we can take a trade in that particular point of interest before it totally gets invalidated. Okay, that's why I said that there is an except and thoughts where we get to entry. So now we have reconstruction, and the rest. And inside this reconstruction, we have internals and the external. Okay. Now the external is don't take out the most recent external. The internal is don't take out two internals, most recent two internals. Okay. Well, what happens if the external gets taken out? If the external gets taken out, it is considered as what you all know before, not new. So might have taught you a basic class. Change of character. Now there's a difference between disruption and change of character. Disruption is not change of character. Disruption is an interference in internal order flow, which price can still buy or sell. It doesn't affect the higher time frame. As a matter of fact, it doesn't have a say in the higher time frame. Whatever can influence price deeply comes from the higher time frame. I said it before that I do not take people that don't trade the higher time frame serious. I don't take them serious because why? This is where the storyline begins. Even if you are not taking your entry from the higher time frame, which you are not supposed to take, except you are a swing trader that can wait for 2 months, 3 months for your trade to trigger, and fine, that's there for you. But then this is where you get like a foundation of that particular pair that you are analyzing. With that being said, this is all for order flow. Now let's go into liquidity, order flow, liquidity. Now the three major, we'll still come back to this guy. That's all for now for him. But after this liquidity, we'll come back to this guy and this guy will lead us to the next subtopic, which is the range. So now, what is liquidity? Liquidity is money, okay, and money is what moves this market. If there is no liquidity, the market cannot move. And there's what I always tell my students. I tell them that the market takes from Peter to pay Paul. That's why this very known slogan, if you cannot spot the liquidity. Okay. So that simply means that you have to identify the liquidity before it identifies you. Because if it identifies you, it is identifying your money and it is taking from you to pay somebody else. There is no such thing as God in heaven supplying money to the market to pay people. No. It takes from the ignorant to pay those that know what they are doing. So you can, even after this class, if you don't pay attention, you will still be among the ignorant. I said it from the beginning, I am not a magician. Okay, I don't do magic. You learn and then you practicalize it and you give results. I don't do magic. If you had that whatever in your head, just clear it off. I don't do magic. You're coming here to learn. Okay. Now, if the market is taken from Peter to pay Paul, it means that Paul has to be aware of where Peter's money is kept so that he can be paid with Peter's money. That is simply liquidity. Liquidity is simply money. There is no other simpler method to explain liquidity than telling you that liquidity is money. And now, how can we know where this money is kept? If you remember before, I said that the first break of structure internally is simply an inducement, and that inducement is part of liquidity. I'll come to that. The three major types of liquidity we have the structural liquidity. Permit me to put it in shorthand, LQ. We have transactional liquidity, and the last we have inducement liquidity. We're starting from the inducement to transactional and then we'll get to structural. When we get to this structural, you have to pay a lot of attention because it is a bit complex and not very easy to understand except you pay attention. So now the inducement liquidity is the one that I've been saying since, which is pretty much very simple. Just the first break of structure internally. The first break of structure internally. When we get to entry, I'm still going to teach you a proper way to identify internals and external if you still find it difficult up until then. Okay. But that being said, the first break of structure internally is an inducement. Internally, I mean that's the entry time frame, the time frame when you are going to take your entry. So why the second is disruption low. I explained that before in order flow. So it means that what inducement, it is a type of liquidity that lures early traders into the market. Now, if you're being honest with yourself, let us say for those that have learned before, that probably are yet to sharpen their skills or maybe because of inconsistency or something. Now let us say we have a sweep, their very known Twitter strategy, if I may say. Sweep of liquidity, this they say there's a social liquidity there, who knows? Okay. Now somebody might comfortably enter from this first point. Now, any entry that comes at the inducement is less than 30% probability of holding, because what, the best trade that buyers or sellers have been kicked out of the market. Now, how? Remember, I said something like price can take out a point of interest and still buy with that point of interest. Yeah, breaker block is actually a very, for those that do not know, just forget about it. I just want to make reference. Be a very good strategy. Breaker block, when price takes out, for example, this is an inducement, takes it out now, and they want to sell from here. But the probability of breaker blocks has actually reduced, what I talked about, when something becomes too known. Okay, and then what, it takes it out, they want to sell from here because what, there's a failure in the previous point they wanted to buy. Good and fine, it works for you. But then I just want to tell you that buying at the inducement has a lesser win rate, and after a failure of an inducement is like putting yourself in trouble. Because why? This is simply just a point that price has used to induce early buyers. That does not mean that it doesn't want to buy. As a matter of fact, it could take out this inducement and tap on the most recent point of interest after taking out the inducement, or even buy, even if you don't meet it where it tapped on, and even buy and return back to buy like this. So trading at directly at the inducement is a very low probability, 30%. Imagine if you score 30 over 100, that's failure. Yeah, trade is not a good mark, it's not pass. That's like, I think poor or something. They can put it as poor or failed. Maybe if they don't want to make you feel bad, they cannot put that way. Maybe something like not even average. Okay, so something that has a 30% probability of holding. Today it might work, tomorrow it might not work. That's why you see that the majority of people that trade just this sweep without having proper understanding of it. When I'm talking about sweep, this thing that looks like this, the one I explained that people say it is advanced market structure template. People that trade just that, they are very, very much inconsistent, and I can prove it to them anytime and every day. They might not tell you the truth, but their strategy is very inconsistent if they rely just on trading because it has a sweep or whatever. So trading daily at the inducement is like taking staying where price is coming to take from Peter, because Paul is not here. Paul is below you. The best trades occur when prices have taken out early buyers or sellers. That's why the name of this is called inducement. You can check your dictionary to know the English meaning of inducement, when something has been induced or want to be induced. It's just like a trap. Okay, now you do not have, or you should not buy from here. It's even best to buy the most recent point of interest, because I said it before that price can this guy and buy just immediately. Then the second we have here, transactional liquidity. As the name implies, transactional liquidity. So what is transactional liquidity? Now, if you remember, I talked about, and let's go back to order flow. Now, let's say this is external And then we have our order flow going peacefully without, permit me, an interruption. The two most recent break of structure internally. The last swing point that was taken out was structure 1, because structure 2 inducement. And now price takes out inducement, obviously tapped on the disruption low and buys from there for a bit, comes back to take out the disruption low. Now the moment this thing happened, it is considered that there is, so far it did not break this high. If it breaks this high, then there is a new break of structure that has been created. It did not break this high. This is still our disruption low, which means that what, when this low gets taken out, when this low, I think I'm going to do something. If I take this class the way it was written in the paper that was shared in the group, it might be a bit hard for you to understand, because these things are a bit too much to understand at the same time. So what's going to happen today is that I will take all the templates for the 3 topics, subtopics that are supposed to be taught today. Then in the next class that we are supposed to treat the next topic, we are going to go into the chart for these things and give the template for the next one. The next class we go into the chat for that next one, because like 2 topics every time I come, and then we go into the chat for that one, next one if need be for a template like that. So you can go back to check this out before the next class. Because if I give it, there are some people that find it difficult to learn just immediately, so they have time to process this before the next class. So now let's proceed. Now, this being our disruption low, once it gets taken out and price starts selling, now every other internal becomes internal liquidity. That was what I was telling that person that was asking. He said he was asking that, I think maybe he already knows about internal liquidity, and he was asking if internals are also called internal liquidity. And I told him that they will be called, or they should only be called internal liquidity when there is a disruption. Why? That's when you give them that name, liquidity, because liquidity is money, and this money have to be taken away. Somebody else have to take this money. So how can these people take this money? After disruption, the people that want to buy from the other internals becomes internal liquidity, where price have to clear them. So they will come back to order flow, which we are doing now. But I have to clear them because what, there is an internal disruption. Now, price after an internal disruption clears all other internal structure and turns them to internal liquidity till the external low. Now, what about if price gets exhausted while taking out the internal liquidity? Because so many times it gets to a point where it becomes exhausted and doesn't want to move below anymore. Now, the moment it takes out 2 internal liquidity in the opposite direction, there is a new disruption. What do I mean? Now, it is selling, change trend internally, taking out internal liquidities, supposed to get to the external low, and could not. Now, this low now becomes, this high rather, becomes inducement, and this disruption, which is how we are supposed to be selling from the disruption low or selling from the inducement after it has been taken out, not directly on the inducement after it has been taken out. Then let's assume price takes out the two guys. If price takes out these two guys, there is now a new disruption of the ongoing order flow, the bearish order flow. Now there is an internal change of trend from downtrend now to uptrend. Two break of structure internally makes an internal change of trend. Write it down. And then now we start buying again till where? Till this high. This is the only high we have to sell from again. And this high is a weak high. Why do I say so? Because for this high to be a strong high, it has to take out this low. Remember, I said in the last class that a strong low is gotten from a weak high. A weak high is gotten from a strong low. For this point to be this low has to be a weak low, and for this low to be a weak low, it means that price has closed below it. So even selling from here has a low probability because it failed. It's a failure swing. It failed to take out this guy. So because it failed, I don't know. Can you hear me? Let me check. The person I put as preferred, Joshua, can you hear me? Joshua, can you hear me? Maybe Joshua don't go sleep. Okay, let me take the next person. Danny, can you hear me? This person, this
Yes,
is the Danny. I just want to know that you guys can hear me.
yes, I can hear you.
All right then. So, like I was saying, this is a failure swing. Failed to take out what? This low. So, which means even selling from here has a low probability of holding. Would have been best if we took out this guy and later wants to sell. Here it becomes better to sell. If he gets exhausted and cannot sell any longer, all he has to do is take out two break of structures, because the formation of price like this, these internals that price are creating, this internal order flow is going to give us a one leg structure of external. That's just simply what it is doing, forming what to give us an external. How to give us that external makes the high weak. That being said, let's go to the next. I was trying to explain transactional liquidity, but I have to deal with this first before that. Transactional is simply, let's say, being forward of internals. Now, let me show you. Let's assume we are having 4 hours time frame here. In the next class, that's when I'll talk about that structural liquidity. I'll talk about range today. So now these are 4 hours time frame. Structural liquidity is simply when price creates a change of character in the higher time frame. Every other previous external or strong point transactional liquidity. It is like not really the opposite, but it is like the internals where price takes out the disruption low and every other internal turns to transactional liquidity turns to internal liquidity. This one, after price takes out the most recent external low, every other external turns to transactional liquidity. And just like the other one, price has to clear them and they are not to be traded because their family member failed to protect them. Now, once that happens, the only thing that can make us try to buy again is, for example, let's say we were trying to sell, and then two internals failed, giving us what traditional internal liquidities after what a disruption that failed, and then we start buying obviously down to where the external. Now, when we get to the external either holds or fails. If it fails, then there is a new change of trend. There is a new change of trend. So internal disruption, we buy to sell at the external fails, and this is a change of character. We are no more selling. We have to start buying. Very well. So internals, externals, traditional liquidity, internal liquidity, they all are almost the same thing. For internal, price simply have to take out a disruption and then turn other internals to internal liquidity till the external. Then for the external, price simply have to change trade, taking out one, the most recent external, turning every other external, which is every other strong point in the higher time frame, to transactional liquidity till the range. The other one is to the external, and for the external is to the range. Now, what is this range? That's the last we'll be treating for today. Now, what is this range? Range is simply the point where an initial trend started from. That's why I said if I go to the chart to teach, like to show you all these things, I'm very sure that you will not understand. So it's just we are not rushing, we are not running to anywhere. Let's be patient with ourselves and focus on the process. So, what is this range? Range is simply the point where price initially started a trend. What do I mean? Now, let's say we are on a downtrend. These are four. Range should be only gotten from the higher time frame. So we are taking 4 hours as where we mark our structure to know the trend of the market, because when you want to analyze each pair, you have to look for the range first. Then you draw the structure, which is identifying the basic market structure, which is the 4 hours time frame, knowing all the external to the most recent external. It is now the most recent external that you will show. You draw your internals, and then you get your two most recent internals and take one as your adjustment, while the second as your disruption. So now these are 4 hours time frame. I want to show you how to get a range. Let's say when you, after you finish learning, this is where you meet price. Here, okay, it's where you meet price. Now, this originally is a bearish external order flow, price in sequence going down. Okay, now the process of this is called external bearish order flow. If you observe something, work with me. Price change character here. Am I right? It changed character here. Now, the point where it changed character, the moment it creates three external, means breaking structure 3 times to 4 hours time frame. I'm not talking about internal, external, because structure 1, 2, 3. If you break structure 3 times in the external, the low where the change of trend occur is called a range low. I'll tell you the work of this range low. That's too small. Called a range low. Now, compulsorily, it has to break structure externally 3 times. But that doesn't mean after I change character, you have to wait for it to break structure 3 times. No, you don't have to wait. Just follow the market and keep going. You will know when it has broken structure 3 times externally. You will know. And all you have to do is to mark out that point, usefulness of this range. Now, if you remember, I talked about transactional liquidity. Now, the moment it keeps going and it gives a change of trend again, get exhausted and it gives a change of trend again, it is going to turn these other externals, which are the strong points, to what? Transactional liquidity till the range low where the initial trend started from. It's just like saying for internals, takes up internal liquidity till the external. For higher time frame, takes out transactional liquidity till the range low. If while taking out transactional liquidity, this guy show your character here, this place can be a range high. What does he have to do? Just break structure 3 times and we have a range high. Range high, range low. Our focus now will be from here to here. You don't have to go far. You get the range low, you mark out your structure, which is your strong point, till here. You follow up again to the current market price. So now, if while taking out these guys, it gets exhausted and could not get to the range low, all he has to do is give us internal disruption. All he has to do is this guy, first of all, give us internal disruption. After the internal disruption, then gets to this place and fail. Once it fails, it breaks structure 3 times. A new range low has been created. It breaks structure 3 times, and this remains our range high. The only place you can now sell from again if there is no internal disruption. This one deals with the higher time frame. In the lower time frame, there can be internal disruption and you just keep following up. But then originally where you can comfortably sell from again should be this guy. But this guy will also be what? A failure swing will be a low probability. Why? Just like the internals as well. You have to like join this thing because they actually correlate. Because if you're able to take out the range low, which makes it what? A weak high. If you are taking it, then it becomes low. Both the internals and the externals, they both work together. The only difference is the time frame and the name they call them. But they actually to work together. So we have to stop here. I'll be taking few questions. All you have to do is raise up your hands. I'll unmute you. I ask your question briefly. Please don't repeat somebody else's question. I beg you in the name of God. This is almost 11 p.m. Don't repeat somebody else's question. If you don't have any question, don't waste our time, please. If I unmute you, you don't talk, I'll mute you back. Thank you. Simply raise up your hands. I'll unmute you, ask your question, and we proceed to answer your question, moving to the next person, like that. So, any question, let me check below. Just raise up your hands, that's all. Who is the person that raise up? Just raise up your hands, are we? Billionaire, okay, fast, please. I will unmute everybody that asking,
Thank you.
raising
So
up their hand.
let's assume now the price is actually heading to the range high, and we
Okay.
see a buy pattern. Can we still buy to the end of the uh, range high, or we should just hold on and see what the price will do?
Okay. You have to buy now. Once it's a change of trend, from the internal disruption alone, you need to start buying. You will start buying, but at this high here, should either be to take profit for your buy and your point of interest for your sell. And if this fails, you continue buying aggressively till there's an internal disruption in price that will either take you to another external low or it buy down to the reach high. We'll get to the range, you sell from there. If the range fails, just keep buying and keep going.
Okay, thank
Do you
you.
get me? You don't have to wait for yeah, the next person, I muted few persons, okay? Okay, Chuku.
Good
Okay,
evening.
Chuku. Okay, Chuku. Okay. Yeah, good evening.
Good evening, man.
I'm listening, Chuku.
My question actually is just like you showed us the range low, which is after three break structures from the latest low.
Ex-
So does it
external,
mean
yes.
that we can start? Does it mean external? Yeah, sorry. Man. Does it mean that we can start maybe let's say preparing to long after it has broken structure three times?
This is what I'm talking about. That's the same. Right from before this change of character appear, it's already a disruption of these cells that is ongoing here. So the moment that disruption has already occurred, you have to start buying already. Putting your eyes at this external high to sell. It is when this external high fails, then you start buying. Put your mind that a range low should be formed soon. Put your
Okay.
mind that wait. What are you looking for? Sometimes before a range will be formed, it can take months. So you'll be waiting for months. Another thing, please don't about mute yourself. God.
Hello.
Yeah, I'm listening.
Good evening. My question is this: in which time frame exactly are we looking for these internal disruptions? Can you hear me?
Low, yeah, lower time frame. The time frame where you get a lower time frame, externals, higher time frame. Higher time frame correlation 4 hours, 30 minutes can go. 4 hours, 1 hour can go. 1 hour, 5 minutes can go. 1 hour higher time frame, 5 minute lower time frame, not advisable because you are still learning. But 4 hours higher time frame to get your external, your range and your structure, 30 minutes or 1 hour to get your internal disruption. Yeah.
Okay. Thank you.
Yeah. So okay. Second to last person, please just raise up your hands. I will mute you. You ask your question. Then we leave. I muted somebody just now. What's your name? Gabriel and Arizona. Okay, let me listen. Hello, Gabriel.
You can hear me.
Go on, I'm
You
listening.
can hear me.
I'm listening.
Okay, please, my question. My question is on the break of structures. Like, do you count the change of character as a break of structure
No,
when
I
the
did
trend is
not.
about to change?
No, I did not. I did not count it. I started from here. One, two, three. Don't count this guy.
Okay,
Any other
thank you.
person? You're welcome. Any other question? Arizona, you raise up your hand. I omitted you. You're not talking. Something that person has anything to say. Okay, so this will be the end of today's class. I've checked and nobody raised up their hands again. Think. Okay, in the absent, okay, one person. Please be raising up your hands fast so that we will not sleep here. Let me hear you. I omitted you that just raised up your hands. If I unmute you, just stop, please. And stop raising up your hands if we don't have a question now.
Okay, my question
But
is, can you hear
okay,
me? My
yeah, I'm
question is,
listening.
so if that range high cannot take out that range low, does it mean the bearish trend is over?
Okay. If this range high cannot take out this range low, and price takes out this range high, right?
Yes.
Yes. The bearish is over. But from here already, from disruption and from this change of character, the buy has already started. You just need this last confirmation, last point of true mitigation, last confirmation to tell you that we are really buying for it, for it. They are not joking. The buyers are not joking. Do you get?
Okay. Thank
All right. Any other person? Yeah, this person.
Where can we know to take an entry? To place our entry.
Ah. Where do you place your entry?
Yes.
I see that. Let me look at your picture face, yeah. But that's not our topic now, sir. We're
Okay,
still
so
talking. Yeah, we're still talking about range, order flow, liquidity. That's not our topic. We'll get to that. Okay.
okay.
Yeah, no problem. Yeah. Any other question from any other person? We there's so many people that are not talking. It's 11 already, so we have to shut down immediately. No question.
I have a
Okay.
question, Fabi.
All right. I'm listening.
Okay, thank you for the class. I just wanted to, there are two areas I didn't understand. You talked about last point of true mitigation and pullback candle. I don't understand it. I don't know if you can touch it a little bit, please.
I don't really explain it. I just said it. When we get to
Okay,
entries, I will explain it. Yeah, I know explain it. I just said it.
okay.
If I've muted you, ask your question.
Can you hear
Okay,
me?
Jay. Yeah, I'm listening.
You said something. I just wanted to know here. Like, let's say if price should just do like two break of structure without taking out two internal highs or low, is it a change of character?
If price should create two break or structure like this.
Like, let's say like it just did like two break of structure, but it didn't take the second leg of the internal low. Will you say that is a change of character?
For something to be a break of structure. See, let me tell you. Whether there are other things that are happening inside here, it doesn't matter. Those things are even called structural liquidity. That's why I said we'll get to that. Until it takes out this low, there is no change of character yet. Until it takes out the disruption low. Whether I create 50 structural liquidities inside before it takes out this guy, it needs to take out this guy properly. You get me?
Okay.
Yeah. Any other question for any other person? Let's shut
I have
down.
a question.
Okay.
So this range high that is trying to create now, is it the retracement to form a new low? Let's say if the range high can actually create break that range low. The range high that is actually forming, is it like a retracement to form a new low?
This range high.
Yes. If it breaks this range low, this whole range low to
If
this range high, is it like a retracement?
this range low to this range high,
Yes.
or this one to this one, which this to this,
Like this to the range high. Yes.
this one here.
Like your range low your range low to your range high. Is it like a
Okay.
retracement or it's just
No,
I don't understand that
for
part.
our time frame now cannot be a replacement.
Okay.
This is a proper movement. These things even take months to occur. You know what is 4 hours time frame at all? One candle forms in 4 hours. Just like this thing that's happening here on this chart. See August
Like, can't
2024,
be a change
25th
on the
August.
other time.
What did you say?
Can't it be a retracement like maybe on the daily or the weekly time frame?
Can't it be a retracement on the daily or weekly time frame? Is that what you're asking?
That's what
Please,
I asked.
are you getting your entry from 4 hours? If you're getting your entry from 4 hours, then it's just like reverse. Your internals becomes your 4 hours time frame. Let me tell you the truth. If you turn 4 hours time frame to your internals, it means that your external is considering as your inducement. If you make 4 hours time frame your point of interest where you will enter from, okay, what you would have used as two break or structure that one would have been transnational liquidity is what you'll be turning to inducement and disruption. Do you know how long that trade will take to get to disruption? Maybe you're a position trader. That's just the truth. Holding for years. Because it's
Now I
important.
understand that.
Yeah.
Hello.
So,
Stopping here.
another question. I have just one question to ask you. So
Okay.
actually a question. You said something about teaching us how to properly spot internals because from the template usually it's kind of easy, but on a real chat it's very
Not
very
today
difficult.
now.
But I don't know if
We'll
we're
get
still.
not today.
Sorry, I
We'll
can't
get
hear
to
you.
that. That's why I
All
said
right,
I
no
listen.
problem.
Somebody had comes.
Please, is it possible for?
Somebody
Can you hear me?
okay. Is it possible for what?
Is it possible for you like to give us like a written template on
We
the inducements and the structural and rational?
you have to watch this video again. Then you write. How will I? You need to write this thing in the way you understand. I have said it out. That's why writing is important. As I was talking, you would have jotted it down as you understood it the way I am talking. Written templates. No, now that's like nursery school pattern. That's writing down all those things I said. Ah,
It's not like writing down those things you say, just like something like, let me say, how you said to break off internal is like a change of structure, like all those things. That's what I meant.
like writing what I said now. Writing it like typing. In this,
Sorry, but then are you recording?
of course now.
Hello, ma.
Okay.
Yeah, I'm listening.
Good evening, ma. Okay, I have a question on disruption. Please, can you display your chart so I can explain maybe with your part two?
Let me join the game. Immediately cleaned it. Okay. Yeah, what's your question?
Okay, so my question is, if price comes to your disruptions, or it didn't mitigate your
Price coming to your disruption, then what? Hello. Hello, I'm not hearing you. What's your name? What's written here is guitar. Are you there?
I think he's
Hello.
having network issues. So.
Yeah, another person that has a question can ask. If there's no question,
Okay, so I wanted to ask something about that change of character that you explained earlier on.
okay.
Yeah, so on your chart, you said something about the low coming to sweep the other low, like the previous low that was there. So I didn't really understand that part very well.
I do not even understand what you said. Can you come again? Thank you.
Like okay, I actually meant that when you drew the chart on break of structure and change of character, when the you explained break of structure, then when you got to change of character, when the other guy asked the question, I think it was Jay, something about change of characters, about the low breaking the previous change. I did not really get that part very well.
Breaking which load? This one? Somebody else that understand what this person said. Please, can you show it? Let me hear.
Can I help him out?
Okay,
Oh yeah, thanks, man.
sure.
So if you display your screen, what he meant was, you said that once we have an inducement, and
Okay.
even if we have internal break of structure, but until the disruption is taken out, that will not be, it's still not considered as anything yet until the second leg, which is disruption, is taken out. So I think that's what we wanted to understand. So even if we have small break of structure on that same line, it's not.
That small break of structure as structural liquidity. I will get to that. If that is your question, it means I will get to that when we talk about the other liquidity.
Oh, all right, thanks. I really appreciate it.
You're welcome.
All right, good evening. Good evening. Good evening.
Go on.
Okay, I have a question.
Hello.
So does it mean when price didn't take out the disruption level, if it's on a buy trend, when price haven't taken out the disruption level, does it mean someone can still buy on that point?
When price hasn't taken out the disruption level, just after, will it take out the inducement?
Yes.
Once you take out the inducement, it can still buy from anywhere. Because what price actually coming back to take is the inducement. I said it before, which is the money. So it's touching the disruption is on the probability of how close is to him. Okay. Or else, after it takes out the inducement, it taps on the nearest point of interest. That's why there is an entry model that even if you do not get it from the nearest point of interest, you can still enter it after it has tapped, just like a re-entry. After it has tapped on the nearest, let's assume that the nearest point of interest, there's a tap on it. There is would I say a method where you can still enter it before it goes. That's if it will come back. Do you get?
Yeah.
Alright. So we have to stop here right away. Our time is fast spent. Please use the question of others to answer yourself if you have the same question. Okay. Books is here. Good day, sir. And it's nice to have you. That's actually one of my tutor person that taught me. So it's a privilege to have him listen to me teach others too. So I'm actually giving honor to whom honor is due. So good evening, sir, and let me unmute himself so that he can greet me back. So maybe answer my greeting. Good evening, sir. Sir Books, are you there?
Sorry, can you hear me now?
Yes, sir. I can.
Good evening, Mimi, my love. How are you?
I'm fine, sir. Thank you, sir.
Yeah, it's been a while.
Yeah.
And
So,
congratulations
guys,
to you again for getting everything.
no problem. Thank you so much, sir. I appreciate it.
Yeah, come. All right, guys.
So we have
I
for
peep.
today.
Okay, sorry for disturbing the class.
No problem at all. I have to recognize your presence. Actually, a privilege to have
All
you.
right, thank you.
So we'll be meeting. I think next tomorrow again. So see you guys in the next class, and make sure you watch the video. I'm posting it tonight. Make sure you watch it and have a good and profitable week. And good day, good night, good whatever. Bye.